Good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 8th October 2020. In the international market, the bond market sold off after the Fed's minutes from the September meeting did not show any mention of the central bank planning to shift its bond purchases towards long-dated maturities. The hope was the Fed would start buying more of extended maturity bonds as the Treasury issues more longer dated bonds. The odds of Democratic Joe Biden sweep is increasing, and the hope is for higher government spending next year. With no long dated bond buying and Democratic win giving hope for high inflation in the future, the US 10-year benchmark was up 3 basis points, closing at 0.81 percentage points, and 30-year was up by 4 basis points, closing at 1.60 percentage points. Just to remind our viewers, on 4th August 2020, the US 10-year was at 0.52, and now on 7th October, it is at 0.81. Almost 29 basis point increase in 10-year benchmark in last 1.5 months. We expect the US 10-year to trade in 0.90 to 1% range by December end if either of the parties sweeps the election. We already have given you our scenario analysis on election outcomes and impact on US bond yields. The gap between the German and the US 10-year yields was at 129 basis points, close to its widest level since March, hit on Tuesday, mainly driven by a rise in the US yields. The German 10-year bunds were trading at minus 0.49 percentage points. In the crude oil market, no major price moving news for crude, and Brent is trading flat at $42 per barrel. Our stance on the crude is still neutral, but a long-term view of $50 per barrel in sight. In the currency market, dollar index or DXY is trading at 93.64. The range for today is seen at 93.34 to 93.86. Have you noticed that for the last 3 consecutive days, the dollar is exactly behaving according to our in-house models? USD-INR with a high of 73.60 closed at 73.28 yesterday. Again, the USD-INR showed strength near 73.30 region, and it turned out to be a pivotal one. If the dollar weakness continues, we may see rupee below 73 if RBI does not intervene. But that does not seem to be the case, at least in near term. USD-INR for today seems to be trading in 73.15 to 73.45. Exit trading ranges will be available once the market opens. In the domestic market, RBI MPC policy meeting will be tomorrow on 9th October. Night research expectation is interest rates are expected to be kept unchanged because inflation is above RBI's target band. The monetary policy stance is expected to remain accommodative as GDP is expected to contract this year. MPC committee's votes and views on growth, inflation and the repo rate will be closely watched. More clarity on their views is likely to emerge when the minutes are published. Market will refrain from taking any new fresh positions ahead of MPC tomorrow and will again be range bound. 577 GS 2030 closed at 601 and 522.25 at 527. Let's try to get to know some facts, some interesting facts on states borrowing. The states will seek to raise 2.02 lakh crore in the current quarter, meaning weekly supply that is almost 60% more than the level seen in the first half. Maharashtra, Andhra and Karnataka states have seen their borrowing costs rise by an average 53 basis points over the last 1 month. The spread between 10-year state and government bonds has widened to a 4-month high of 88 basis points. We at Night Research feel the spreads can still increase in future given the increased consistent supply of SDLs and no more buying spree for long-dated maturities. We had been a vocal supporter of SDL spreads reaching to 90 basis points since last 3-4 months, and here we are. The wait for our clients was worth as they could get 35 basis points more on the same SDLs available 3-4 months back. If you haven't subscribed to our services to increase your portfolio yields or to manage the risk, you can reach out to us on 9930307466 or research@nightfintech.com.